Thank you. Again, thank you everyone for participating in today's event. We are very pleased to have you with us here today, and equally to have a number of panelists and speakers reflecting on some of the global experiences around energy efficiency finance, platforms and protocols. As I'm sure you all are aware, and our speakers today will convey to you, energy efficiency finance can be challenging for a number of reasons, but there is excellent global experience in this space as to some of the ways to address this and to attract the flows of finance for energy efficiency measures across a number of important sectors in our economy. I'm very pleased to host today's event through the OECD's Clean Energy Finance and Investment Mobilization Program with India's Bureau of Energy Efficiency. And we'll first kick off our session with a number of remarks from first Dr. Bakre, who's Director General from the Bureau of Energy Efficiency of India, and then Dr. Gomer from the OECD's South and Southeast Asia program, and then finally from the Additional Secretary of Ministry of Power of India, Mr. Vivek Kumar Dewangan, if I pronounce his name correctly. And then we will have some closing remarks and a kickoff to today's discussions with Mr. Arijit Sengupta, who is the Director of International Communications and Affairs at the Bureau of Energy Efficiency. With that, Dr. Bakre, I kindly give you the floor for the opening remarks for today's event.
Yeah, thank you so much. And it's indeed a pleasure to have you all for this discussion on the topic, which is the financing of energy efficiency, a very, very important topic, not only for the Bureau, but almost every organization who is contributing to the energy efficiency as well as climate change mitigation. I'm also pleased to have representatives from different state agencies, the financial institutions, the experts, and also delegates from key organizations who are actually engaged through various schemes in the energy efficiency financing. This particular topic of financing is actually going to assume more and more importance in this coming decade, because every country, every policymaker, every department is going to push for the higher ambition. Every sector, every scheme will be having some kind of a target, and to achieve those targets, which are definitely not the business as usual, we are going to have more efforts required in terms of technology deployment, in terms of capacity building, in terms of even seeking latest technology on the low carbon side. So all these things will actually require a lot of investment into new technology. We need to assess what is the kind of payback period, what are the technology costs, and then whether there is an economic sense or not. But most important, does it really fulfill our overall carbon reduction targets in every sector of economy? And this is not only the case of developing country like India, but equally applicable for other countries as well. So in this regard, the partners and delegates from OECD are also having a good experience on or success cases, success stories in how the energy efficiency financing can push forward deployment of low carbon technologies, improving energy efficiency, and finally getting the returns much more than what it was invested in within a period of reasonable time. So in this regard, we look forward for the discussion from all of you, opinion from experts, and also if any success stories can be shared, that will be really good for us. Finally, the representatives from state agencies who have joined here and can take a lot of lessons from today's discussion, and I'm sure they will come forward with more innovative models, schemes, and also sectoral deployment, so that we can see the energy efficiency financing as a very effective initiative in promoting our energy efficiency and our climate change mitigation. So once again, thank you so much for joining here, and I'm really delighted to be part of this discussion and the workshop. I look forward for a very exciting discussion. Thank you so much. Over to you.
Thank you very much, Dr. Bakray, and thanks again for V's support and willingness to organize this event with us. Let me please now turn the floor to Dr. Alex Bomer, who is the head of the South and Southeast Asia group at the OECD. Alex.
Thank you, John, and thank you so much, Dr. Bakray, for your excellent remarks and kind words to our team. Dear participants of this workshop, colleagues and also friends, I'm very pleased to inaugurate today's discussion on energy efficiency finance platforms and protocol. You know that OECD cooperation with India has grown considerably over the last 2 decades, and India is an important contributor to a number of our OECD committees. We basically work mainly through our committees and other activities, including knowledge sharing events like the one today. We are very pleased to have India as a key partner country and to support its efforts to meet our common objectives with regard to sustainable development goals and also the Paris Agreement, as we're also based as an organization here in Paris. That's very appropriate. The Clean Energy Finance and Investment Mobilization, or short CEFIM program, is a very important program. I've seen it also working in a number of countries. Indonesia was the last one. And it aims to strengthen enabling conditions to attract finance and investment for clean energy projects in emerging economies. In one such example of our collaboration is here with India. And recently, the CEFIM program kicked off their start with a clean energy finance and investment roadmap with India. I think this is supposed to be a very practical tool where we can exchange good practices. We're learning from the Indian experience, our experts, but also the other way around. So this is really a kind of two-way street engagement here. And today's event with the India's Bureau of Energy Efficiency, and thanks very much to the good colleagues there for hosting us, is an important contribution to this dialogue and looking at international experiences for finance platforms and protocols that have been used to facilitate investments in energy efficiency. And these platforms and protocols are important tools to help increase the overall familiarity with energy efficiency projects, and that's also important for us in a way, increase investor confidence in them. And on behalf of the OECD, I would like to thank today's participants for taking your time. We will be relevant and brief. I think that's how we do this here. And to share their experiences and insights on ways to increase the business case for energy efficiency. These insights are valuable lessons on how different interventions can help to mitigate investment risks. That's in every investment project a key issue, and improve access to finance, but also increase opportunities to scale up capital for energy efficiency. I also would like to take this opportunity to congratulate actually India's Bureau of Energy Efficiency for the progress it has made already in creating a new energy efficiency finance platform. So highlighting this particular aspect of the project, which promises to help stimulate financing for energy efficient projects in India and build upon India's strong track record of supporting energy efficiency measures. Would additionally like to thank the government of India for its collaboration with our CEFIM program and BEE for organizing this webinar. You should know that Team CEFIM stands ready to support you. And lastly, the government of Denmark is supporting this project, and we thank them for that. Thanks so much, and I'm really looking forward for a fruitful and interactive interchange, and all the best for this meeting. Thank you.
Thanks very much, Alex. Unfortunately, the Additional Secretary from Ministry of Power has been called away and won't be able to join us. So Arijit, I will leave you the burden of closing these introductory remarks, and very, very pleased to have you with us today.
Yeah, thank you, John. Unfortunately, our Additional Secretary, Mr. Vivek Divanganji, couldn't join. So at the outset, I would like to thank Dr. Alex Bomer, who is the head of South and Southeast Asia of OECD, for the special address. Sir, it is very encouraging to see that OECD, through its Clean Energy Finance and Invest Mobilization program, is assisting India to improve access to finance, mitigate investment risk, and increase opportunities to scale up capital for energy efficiency. So we are really hopeful that these efforts of OECD will complement our existing bilateral and multilateral efforts to promote energy efficiency financing in the country, which we are getting through the support of European Union, Government of UK, and Government of Germany through GIZ. So we really hope that this support of OECD will really kind of complement our existing programs also. I'd also like to thank Mr. Abhay Bakre, the Director General of Bureau of Energy Efficiency, whose leadership and guidance has been crucial in driving various initiatives on energy efficiency financing in the country. Thank you, sir, for your presence. Last but not the least, I would also like to thank my colleague from Bureau of Energy Efficiency, Ms. Vinita Kanwal, and colleagues from CEFIM, John and Cecilia, who have worked hard to organize this webinar. And I hope that this webinar on energy efficiency financing will really prove to be a success. I would also like to thank all the esteemed speakers who will be presenting in the various sessions of today's webinar, and the experts from various domains who have joined this webinar. Thank you, sir. Thank you for your presence, and over to you, John, for taking this forward.
Thank you very much, Arijit, and thank you to all of our opening speakers for these kind remarks and for highlighting the importance of today's discussions. Just a few housekeeping elements as we move into the first set of presentations on some of the global experiences working with energy efficiency finance platforms and protocols. I see that there is a hand raised already in the Zoom chat. Please do note to all of our participants today that you can send questions or raise your hands, and we will have a question and discussion period at the end of presentations. I'd also like to highlight that the first three presentations that we are discussing this afternoon, or this morning for some of you, are part of work that the CEFIM program has done with the Bureau of Energy Efficiency, and that these case studies will be posted as of today on our CEFIM webpage. You can find this by going to oecd.org/CEFIM, C-E-F-I-M, where there also is additional information around our activities with India and other CEFIM countries. Moving into the first set of presentations, we will have four speakers today, starting first with Mr. Peter Sweatman, who is the CEO of the Climate Strategy and has been working as the rapporteur for the Energy Efficiency Financial Institutions Group here in Europe, excuse me. He will be followed then by Mr. Carsten Glenting, who is representing the European Commission's De-Risk Energy Efficiency Finance Platform, DEEP. And then we will have a presentation from the Investor Confidence Project by Mr. Trevor Mead, who is a certification program lead for the Green Business Certification Incorporated. And then finally, we will have remarks on behalf of the Bureau of Energy Efficiency of India, Ms. Vinita Kanwal, on their new energy efficiency finance platform. So with that, Carsten and Peter, I hand the floor over to you.
Thank you so much, John. Director General, Director and Additional Secretary, it's a real pleasure to be invited to discuss something very close to my heart, which is the Energy Efficiency Financial Institutions Group. So just to be brief and to stay within the 5 minutes, this standing group of experts has been working since 2013. And it's very important to know that without the Energy Efficiency Financial Institutions Group I'm about to describe, there would be no DEEP that you're about to hear about, and there would be no Investor Confidence Project that you're also about to hear about, because the Energy Efficiency Financial Institutions Group, which began its life in 2013, has given birth to over 20 initiatives of such characteristics, and has directed the research and innovation funding in this area by the Commission through its Horizon 2020 program and Horizon Europe program, in so much as the questions and the issues that were uncovered by our membership, which now extends to over 500 individuals across financial institutions, both public and private sector, technical experts within energy efficiency, and representatives from the different ministries within the Commission, which include DG ENA, which is the Energy Ministry, DG Klima, the Climate Ministry, DG FISMA, the Financial and Regulatory Affairs Ministry, and Regio, the Regional Funding Ministry, Justice, the Justice Ministry, and others, Grow, the Growth and Economics Ministry. So in a sense, the points that I want to make about the Energy Efficiency Financial Institutions Group, which I think are relevant and that you can't read on its website are, number one, it's been formally standing since 2013. So in other words, it's been really doing this a very long time. And the interesting thing about financial institutions is they don't change. So we've had the EIB as a member since the beginning, and the EIB continues to be a member. That's the largest funder of energy efficiency we have in Europe. KfW, for example, the German State Bank and Development Bank, has been a member since the beginning. We've had a large proportion of private banking institutions who, while their people have turned over time, have continued to be members of the platform. And the thing I want to sort of underline here is, whilst we are known to a degree for our landmark report that was published in 2015, right out of Maros Šefčovič, the then Vice President of the Commission in charge of the Energy Union strategy. So energy efficiency in the context of Europe is the first fuel for our economy. And that's a principle that yesterday, in the Fit for 55 package of regulation that the Commission has just launched, is now enshrined in Article 3 of the Energy Efficiency Directive. So energy efficiency first is now a full principle of the way in which the Commission is planning to deliver its energy and climate objectives until 2030. So I'm personally delighted for that. And in fact, the work of the EFIG has an annex unto itself in the staff working document. So Annex H of the Energy Efficiency Directive is dedicated to describe the work of our group, for which we're extremely proud. What Carsten is about to describe to you, which is the database deep, is also referenced in footnotes all across the directive. Next slide, please. So how do we get to being to being where we are today? It happened in 3 phases. The first phase was a report that described the state of play in 2015 and what, from the perspective of both the market and from the policymakers' perspective, what the problems that we had identified actually were and what our recommended solutions were, both from the policymakers' perspective and from the market's participants' perspective, meaning private finance. Second of all, we produced tools. So once we developed a group and we developed a degree of credibility, then we received funding, additional funding from the Commission and support from the United Nations Environment Programme's Finance Initiative, which is also the co-coordinator and co-convener of our group, to deliver the tools. DEEP is one of those, and an underwriting guide, which you can find on our website. And we also took the conclusions from our report and we rolled them out in the individual member states. So there, what might be interesting for you to consider in India perhaps is having something that works at the national level and then replicates at the state level, given the large and complex nation that I assume you are. The third phase was something called Smart Finance, which began in 2018. And there we have a series of working groups. The world of energy efficiency finance is now so deep and technical that we now have on average 6 working groups, each of whom composed of 30 to 60 individuals that are elected against a set of criteria, which are working together to solve some of the more complex and detailed questions that the Commission and policymakers have in Europe. One of those is the DEEP. Another one relates to the correlation of the value of energy efficient collateral and the likeliness of credit default. One is best practice in the design of financial instruments. One is industrial energy efficiency. One is looking at the data aspects of energy efficiency. One is looking specifically at the energy efficiency first principle and how it should be implemented in specific industries within the finance sector. So as you can see, and here's where I'm going to end, the EFIG standing working group of now over 500 members has really gone through several phases of its evolution, and I think is a very good model for nations thinking about the complex issues that this unravels. I was delighted, and to close, I was delighted always to have worked very firmly with India and its Bureau for Energy Efficiency in the context of the G20 Energy Efficiency Finance Task Group, whose work I had the honor to be able to lead. And to close, I still have my Ujala app, which I downloaded at that time and I constantly look at to give me a positive feeling at the beginning of the day, noting today that according to Ujala and ESL, you have installed 367 million LEDs and are saving 38 million tons of CO2, something that brings a light to my day, and I thank you for that. I pass the floor to Carsten.
Many thanks, Peter. So I will dig into a bit more detail with one of the tools developed by the EFIC. It's the De-risking Energy Efficiency Platform, or abbreviated DEEP. This is an open source initiative to help upscaling energy efficiency investments through better information on the risks and returns of actual projects in energy efficiency across both buildings and industry. It's an open source database. That means it's accessible for anybody. It's no cost. It's accessible through the internet. The link is provided here. You'll get the presentation afterwards. What it does provide is that it provides a better understanding of the risk and return of real energy efficiency investments across both industry and buildings. And it's gradually growing, and it's growing both in terms of projects and in terms of functionality. There are currently 17,000 projects in the database. The data is provided by different data providers, financial institutions from both the public and the private sector, energy agencies from the different member countries, ESCOs, and various financing mechanisms. So it's a quite wide group of different data providers. Some of the key results that are visible in the platform is that the median payback time on a building renovation measure, and this scale, of course, from on one end, lighting replacement, overheating and ventilation and air conditioning systems, and to deeper renovations of the building fabric, windows, roofs, insulation. The mean payback time is around 5 years. Similarly, for industry, the median payback time for a number of different investments in the platform is around 3.4 years. However, of course, the payback time, although often used as a heuristic for decisions, is not really a satisfactory decision-making tool because it disregards anything beyond the payback time. And therefore, we have introduced what we call avoidance cost, which is really the life cycle cost of energy from energy efficiency. So when the median avoidance cost for energy efficiency investments in buildings is 3.1 euro cent per kilowatt hour, as stated here, it means that the cost of producing a kilowatt hour of clean energy by saving energy when you renovate a building is on average 3 euro cents per kilowatt hour. So this goes back to the energy first principle. Energy efficiency is the cheapest source of clean fuel. Now, what the DEEP does provide is that it provides a lot of benchmarking opportunities where you can enter your own portfolio and you can benchmark it against projects in the database. That can be used both for investment assessment by financial institutions and project developers. It can also be used for policy development. And the chart here shows that deeper renovations, meaning the building fabric measure, etc., compared to just lighting replacement, tend to look more expensive because they have a longer payback time. But if you take into account their full life cycle, they are actually very attractive. But they're mainly attractive from a socioeconomic point of view, as when you enter a financial rate of return which is private sector oriented, they tend to get more expensive. So this means that deeper renovations of buildings need access to support schemes, and this has fed directly into the renovations of the Energy Efficiency Directive, as noted by Peter earlier. Similarly, for industry, the data is decomposed on different types of energy efficiency measures, and the platform shows that there are a lot of energy efficiency projects with payback times below 4 years in industry. It also shows that energy efficiency also in industry is the cheapest source of clean fuel. So the value proposition for users is that you can use it for benchmarking of your projects against a relevant group of peer projects that you can user select. The benchmarking, the value proposition for data providers is that you get to contribute to the overall story of energy efficiency as a effective way of decarbonizing the economy, and also that we protect your data. This is really linked to a central discussion that we had with initial data providers, in particular the financial institutions, who question why should we provide data that could be viewed by our customers as confidential into this database which will display its results publicly. And after some processes with both the banks and in particular the legal departments, we ended up with a model where they anonymize data to the point where they feel confident with providing us the data based on the way that we will be representing it. And we at the same time provide that we will never hand over the data they have given to us as a group of individual projects, but we will only display it in terms of aggregated statistics on populations of at least 10 projects. And that was sufficient for a number of both public and private financial institutions to volunteer to contribute very large numbers of project data to us. The data structure, I think one of the learnings here, if you want to build a data platform for energy efficiency, is to be realistic. Yes, there are some projects that are able to provide extremely detailed data, but many projects have been implemented under financing forms that didn't prioritize data collection, and therefore you have to have a minimum set of critical data that is realistic and that you can get for a reasonable number of projects. Things like where was it implemented, what type of project is it, what was the investment, what is the energy savings in money and in kilowatt hours. We have then developed, based on experience from a number of European countries, a typology or taxonomy of types of energy efficiency measures. And again, here you have to be realistic. Some projects, in particular in industry, are able to describe in extreme detail what was done. But many projects in the building sector, after a couple of years, will not be able to describe to you in very great details. So you need to be able to accept that you only get information on a relatively high level, while also being able to assimilate detailed information and not losing that. And this is why we have this typology, which actually works on 3 levels. And then we have recently launched here at the end of June a new version of the DEEP. It has a new structure where more information is directly available on the landing page without having to register as a user. I would still recommend that you register as a user. There is no cost related to it, and the only thing we request is your email, and we don't use it. It's mainly to protect us against denial of server attacks, etc. There are new data fields that integrate, that includes buildings integrated renewable energy, such as rooftop solar, and fields aligning with the EU taxonomy. And there is a really attractive benchmarking tool that allows you to benchmark internally in the database and your portfolio against the database. And then we've included some more advanced risk metrics and an API that allows you to download data more easy, but again, not data on an individual project level. That is an extremely quick presentation of the DEEP platform. It's a data platform. It's not a market that brings together investors and projects. That's a different type of platform. But this at least helps de-risking energy efficiency projects, both for developers and financial institutions, and also it contributes to policy development by highlighting what are the opportunities. Thanks.
Thanks very much, Carsten, and thanks again, Peter. I think this is a very useful segue, as Peter mentioned, into our next presentation by Trevor Mead at the Investor Confidence Project, which builds upon this very important element of having data to substantiate the value of energy efficiency, and looking at how then to work, particularly with the various actors in the entire value chain of energy efficiency development and financing, to have a common language, let's say. Trevor, I'll let you present more on this, but very happy to have you present on the work that Investor Confidence Project has done using its protocols today.
Thanks, John, and thanks everybody for having me here today. So as we all know, too many economically viable retrofits don't take place in our buildings today. The key reason for this is the lack of standardization in how energy efficiency projects are developed, documented, and verified. Given the wide variety of technical standards and lack of a defined process for how to most effectively apply them, a wide range of approaches are used to identify, evaluate, and implement energy conservation measures. This results, the result is that every energy efficiency project is as unique as a snowflake. We don't have an industry accepted approach for defining energy efficiency projects, their return and risk profile. And the result is costly due diligence and unreliable returns for our industry, which are two big barriers for increasing investment in the space. As Michael Eckhart, Global Head of Finance and Sustainability at Citigroup, explains here, energy efficiency projects don't yet meet the requirements of capital markets. The industry is too disaggregated, so no two projects or contracts are alike. And at the Investor Confidence Project, we've sought to overcome this barrier by bringing standardization to energy efficiency project development. In doing so, we're reducing diligence costs, enabling like projects to be grouped based on project attributes, effectively defining an asset class, improving the usefulness of data sets for investors on projects, reducing project risk, and laying the foundation for future securitization that we see in most other markets, from credit card debt to car loans to mortgages. We enabled this standardization through the ICP protocols, which define a roadmap of best practices for originating energy efficiency projects. These protocols leverage industry accepted standards and best practices to define procedural and documentation requirements throughout the various stages of a project lifecycle. So when developers utilize these protocols, the process that they're following is not only clear to the developer, but also to investors and any other project stakeholders. To ensure that investors have a clear signal for identifying which projects have followed these protocols, we offer Investor-Ready Energy Efficiency, or IREE certification. To achieve this certification, a project needs to successfully complete a quality assurance process that's administered by a GBCI-approved third party to verify that those ICP protocols have been followed. And this quality assurance process happens both during the underwriting period and into the construction and performance period of the project. Similar to a LEED mark on a building, IREE certification communicates to investors that an energy efficiency project meets a quality threshold. So when investors see the IREE certification, they know that they're evaluating a project that has gone through a clearly defined and transparent development process, and that the project's quality has been vetted and verified by a third-party quality assurance process backed by a global certification body. So what does all this mean for increased investment in energy efficiency projects? In the near term, ICP and our IREE certification make investing in energy efficiency projects more attractive. We increase standardization and transparency, which increases confidence and savings. We also help to lower transaction costs by having a streamlined origination process. In longer term, ICP sets the foundation to engage secondary markets by defining energy efficiency projects. ICP enables aggregation of higher quality actuarial data around performance, and then also allows projects to be aggregated into larger portfolios and eventually securitized. Before we close, I want to highlight two case studies of organizations that are utilizing ICP and IREE certification. The first is PG&E, one of the largest utilities here in the US. They're utilizing ICP to vet projects for their on-bill financing loan program. And they found that ICP has dramatically cut the costs of program overhead. PG&E doesn't need to develop or administer a diligence process, technical diligence process. It's also reduced project development costs by 25%. And I think what's most telling about the experience with PG&E is that 90% of developers are choosing ICP over an alternative pathway for diligence that includes a financial rebate. So they're leaving that money on the table to utilize the ICP process. In addition, the Canadian infrastructure banks committed $2 billion in financing to public and commercial building retrofit projects, and they're using ICP for technical due diligence on all the commercial retrofit projects. And ICP solved the critical challenge for the bank here. To deploy such a large amount of capital, the bank needed to aggregate a huge number of projects. And so ICP gave them a pathway to basically standardize the process that each of these projects is following so that they could aggregate the projects into a large portfolio that would meet their $25 million minimum investment threshold. And I know I'm a bit over time, so I will stop there.
Okay, thanks very much, Trevor. And just to let you know, Trevor, there are two specific questions in the chat around the IRE certification process that maybe for the sake of time, you could respond to the audience on these separately. I'd like to thank both of our international experiences, and I think this is, as was mentioned previously in the opening remarks today, been very useful in some of the conversations that our CEFIM program has been having with the Bureau of Energy Efficiency as they develop their own energy efficiency finance platform. With that, I'm very pleased to introduce Vinita Kanwal, who has been working with us across a number of energy efficiency finance related issues as part of our partnership with the Indian government, who will be presenting on this new platform today. Vinita, the floor is yours.
Thanks, John. Respected panelists and my dear participants from various sectors, very good evening to all of you. BEE is a statutory body under Ministry of Power and has been working for various energy efficiency programs in India that results into reduction of GHG emissions. India has been working very proactively to achieve the climate change goals. You can see that there are three important goals which India is working upon: reduce the emission intensity of its GDP by 33 to 35% by 2030 from 2005 level, achieve 40% cumulative electric power installed capacity from non-fossil fuel based energy resources by 2030, create an additional carbon sink of 2.5 to 3 billion tons of CO2 equivalent through forest and tree cover by 2030. It was estimated that USD 2.5 trillion would be required for meeting India's climate change actions between 2015 and 2030. India has proactively pursued mitigation and adaptation activities and achieved a reduction in emission intensity of GDP by 24% over the period 2005 to 16. Due to this, Climate Action Tracker rated India's existing target under the Paris Agreement as 2 degrees centigrade compatible. COVID-19 has put certain challenges in financial sector. The restrictions and lockdowns imposed in the wake of COVID-19 pandemic were equivalent to a massive macroeconomic shock that led to an economic downturn unmatched in recent history. However, Reserve Bank of India, which is the central bank of India, has played a very important role in reviving growth and mitigating effects of COVID-19. And they acted swiftly with aggressive policy rate cuts, massive system level and targeted liquidity infusion moratorium, and time-bound resolution for specified sectors. You can see that the sectoral deployment of total bank credit from approximately 97 scheduled commercial banks shows the outstanding amount in rupees crores. Here you can see that most of the credit has gone to the industry sector, the light green shade if you can see here. And it shows that due to COVID, this industrial credit has squeezed from 32 lakh crores to 31 lakh crores. In September 20. However, industries, which is large industries actually and MSMEs in India, they have been contributing a lot in energy efficiency. There is huge investment potential in energy efficiency. As per the Unnati report of Bureau of Energy Efficiency, it has been estimated that moderate energy savings by 2031 would be 86.9 MTOE. And you can very well see that industrial sector actually covers more than 50% out of it. And that is the reason energy savings investment potential is also huge in industries, which is approximately 50% of the total investment potential of 10 lakh crores by 2031. So there is huge investment potential in industries, which is large industries and MSMEs. Similarly, in ambitious saving scenario also, if you will see that approximately 13 lakh crores of investment potential is there by 2031 in energy efficiency, and out of which the most of the investment is estimated to be in industrial sector. Now, Bureau of Energy Efficiency has been working upon energy efficiency financing programs, which are covered under National Mission for Enhanced Energy Efficiency, which is one of the mission under NAPCC, National Action Plan for Climate Change. You can see that under NMEEE, there are 4 initiatives on which BE has been working upon. First is PAT, Perform, Achieve and Trade Program for large industries, MTEE, Market Transformation for Energy Efficiency. One speaker was talking about Ujala program. So Ujala program comes under MTEE, Market Transformation for Energy Efficiency, FEED, Framework for Energy Efficient Economic Development, Energy Efficiency Financing Platform. These are 2 initiatives which are exclusively for energy efficiency financing. Now, what is Energy Efficiency Financing Platform? This is actually one of the initiatives under National Mission for Enhanced Energy Efficiency, and its objective is to create mechanisms for financing energy efficiency projects and capacity building of financial institutions and industries. Major output under this program is to undertake a lot of awareness workshops, which you can see is one of the output. And second output were certain publications which we have come out in the past. And one of the recent publication was Guidelines for Financing Energy Efficiency Projects in India, which is very instrumental for banks and BFCs as well as industries, which has been very useful in analyzing the energy efficiency projects. BEE has also conducted training program for financial institutions on e-financing between 2015 to 2019. Approximately 28 training workshops were organized with the help of SDA, IFC, IBA, USAID, IREDA, SIDB. And in this program, the major achievements were that 682 banking officials were trained out of 72 financial institutions. Energy Efficiency Financing Platform also covers a new initiative with the name of Investment Bazaar, which was launched in March 2021 in Andhra Pradesh, Vizag by APSECM. APSECM is one of the SDAs, very proactive SDAs from Andhra Pradesh, who had organized this investment bazaar. And the objective of this investment bazaar is to bring financial institutions and all industries on one platform so that matchmaking of energy efficiency projects could be materialized. BEE has an objective to organize at least 4 regional conferences under this program, and so far we have conducted 1. Because of COVID pandemic, the other actually workshops were not organized, but now I hope that the situation is improving. So now we will be very soon organizing the remaining 3 workshops as well. Under new financing programs, there are a few other programs also which BEE is going to start, like number 1, grading of energy efficiency projects, in which BEE is planning to reimburse grading cost of 100 such e-projects loans. So far, IREDA and Yes Bank have been impaneled, and BE is going to sign certain MOA with them. And after that, the scheme will be officially announced. Second is to set up facilitation center for energy efficiency financing in BEE, which will help in getting more and more energy efficiency projects from the market, which will be routed to financial institutions. Third is to restart capacity building of financial institutions on e-financing. Fourth, to set up e-financing cells in certain banks, government banks, to facilitate lending by microfinance institutions at a reduced rate of interest for e-appliances for low-income strata. These are few new financing schemes for which we are seeking approval from Government of India. And as soon as we will receive Government of India's approval, then we are going to roll out these schemes officially. Recently, Ministry of Power has appointed Power Finance Corporation as a nodal agency for energy efficiency financing in India. And BEE has been working very closely with PFC on certain new financing mechanisms and to set up one EE financing appraisal unit also in PFC. And I am happy that today one of the speakers from PFC is also present in the next session, who is also going to elaborate what kind of schemes PFC and BEE are working upon. In the end, there is one KFW credit line which BEE is supporting for SBI's energy efficient housing program For this program, one loan agreement has already been signed between SBI and KFW in 2019, and we are expecting that this program will roll out soon. SBI will start implementing the projects with the fund of euro 250 million. This fund shall be used to extend sub-loans for new residential housing projects, which achieve 25% of energy efficiency as compared to existing building constructions. Facility is supported by accompanying measures of euro 1.5 million for development of the energy efficient housing market and an environmental and social management system within SBI. Additionally, investment grant of euro 10 million shall facilitate achievement of a higher level of energy savings and stimulate a stronger utilization of energy efficient building technologies in the residential housing sector. So with this, I am concluding my presentation, and I would also like to introduce you to my team, which has been working upon e-financing. There are two project economists, Ms. Richa Mishra and Ms. Malvi Mehrotra. Mr. N. Ganeshan is the consultant banking. And if you are having any sort of feedbacks on BEE's financing programs, then we will be happy to receive feedback on any of these email IDs. Thank you very much, John. Thanks. That's it from my side.
Thank you very much, Vinita. And it's great to see the number of these initiatives coming out of the energy efficiency finance work at BEE. Vinita, I'll let you introduce our next four panelists who will speak around some of the work that's happening on energy efficiency finance in India. And just as a quick reminder to everyone, so that we have some time for questions, to try to keep to your 5 minutes, please, as we move towards the end of these panel presentations, and allow for some responses to some of the questions in the chat. Vinita.
Yeah, thank you very much for giving me an opportunity to introduce the panel of speakers for the next session, which is financial institutions on energy efficiency financing. So here there are four speakers. First speaker is from Power Finance Corporation, Mr. Deepak Jain, who is Senior General Manager, PFC. Our second speaker is Mr. KP Philip, DGM IREDA. And our third speaker is from SIDBI, Mr. Rajiv Kumar, General Manager, SIDBI. And the fourth speaker is Mr. Ashutosh Tandon from IFC. So with this, I would like to request Mr. Deepak Jain to please start speaking upon the current activities which they are working upon energy efficiency financing, please.
Yeah, am I audible? Yeah, Vinita, am I audible, please?
Yes, you are audible.
Yeah. At the outset, I would like to thank BEE and OECD for organizing this webinar and giving us an opportunity to share our experiences on energy efficiency. So we all know that in India, BEE is the nodal agency for development of energy efficiency projects. So here I am representing Power Finance Corporation. Just for the benefit of international viewers, Power Finance Corporation is a sector-specific financial institution, which is the largest non-banking financial institution in India, with a consolidated asset size of around $100 billion and net worth of around $11 billion. So recently, Ministry of Power has appointed PFC to be the nodal agency for designing schemes for financing of energy efficiency projects in India. Though certain good amount of progress has already been made in certain areas like Ujala scheme and where LEDs have been installed, and especially PAD scheme where industries have come forward to undertake energy efficiency projects. Still, India has a long way to go, and there is immense potential. And BE and PFC and BEE, we have sat down together and tried to see to it where the scope for energy efficiency is maximum and where we can get the maximum bang for our buck. So we identified this industrial sector as the sector where the scope is maximum, and this million-ton oil equivalent per unit of investment will be the maximum. So we thought that, okay, let's go ahead with the industrial sector first and try to promote energy efficiency project. So we analyzed the various impediments which are being faced by these players for getting finance from various banks and financial institutions. So we had a webinar with various players and tried to zero down on various challenges which are faced by various players. So briefly, I will just like to touch upon 3-4 challenges which are faced by financial institutions with respect to financing. First one is the security. As we all know, we have a ESCO model generally where the assets are being developed on the balance sheet of a project company and the loan has to be given to ESCO. So there are a lot of security challenges there. So very few financial institutions actually are able to overcome those challenges. Then, as we all know, and so many other speakers have already spoken about it, that each energy efficiency project is unique and there is no standard template available for it. So there is really a lack of good structured project in the market. Though BE is trying to have standardized things in place and they have empaneled these auditors, energy auditors, who will collect the baseline data, and another set of auditors called MNV, which will verify the results after project implementation. Still there is a lot of resistance on the part of financial institution to actually come forward and fund these projects owing to these issues. Then, because of the high risk perception associated with energy efficiency project, obviously it gets reflected in the pricing of the loan. So the loan gets priced at the higher end of the band, and which obviously lead to longer payback periods and which further disincentivize the developers to actually take up the projects. Then the fourth challenge, basically many of these projects, they are smaller in size, and once the energy efficiency project is being implemented, it leads to disruption in operations, which further delays the payback period. There is revenue loss. So therefore, the small size projects, they are not so encouraged to actually take up these projects till such time there is good amount of intervention from federal government. So realizing that these are all the impediments which are there for the institutions to fund, as well as for the developers to actually take up the projects, we did a lot of brainstorming, and we thought that we need to have some kind of scheme wherein Government of India has to chip in. And as we have been told by many panelists, and we have also read that various other governments in countries like Germany or China or US, they have very attractive interventions available so that the risk perception of the projects can be reduced. So we thought that we will design a scheme, and though the potential is huge, as highlighted by Ms. Vinita in her presentation, the potential is of 13 lakh crore. But to begin with, we want to start with a number of say 10 to 15,000 crore scheme, which is like $2 billion investment in energy efficiency. So this particular scheme is obviously is currently on the drawing board, and we are finalizing the contours of it, and ultimately there is a process in Indian government which has to be followed before which it can be notified and benefits will be available. So we have our Ministry of Finance which will see this scheme and finally approve it. But basically it will have two kinds of interventions, fiscal interventions from the government. One is in the form of interest subvention from Government of India. So the quantity of interest subvention is under discussion, though we are trying to maximize it, and our endeavor is to get the maximum possible subvention to the extent of 4 to 5%. But the last word on it is yet to be written. Let us see to what extent we are able to get the amount of intervention from the government. So this interest subvention will be passed on to the players who will undertake these energy efficiency projects. Once the project has been commissioned and the benefits are visible and the audit is done, then this interest subvention will be passed on to these players in the form of interest subsidy. So this is basically to encourage the developers to take up energy efficiency projects so that their resistance gets reduced and their payback period gets reduced. But the other part is how to encourage the lenders to actually fund the project. So in order to reduce the credit risk in the eyes of the lenders, we are proposing some kind of guarantee from Government of India, a federal guarantee from Government of India, which again will depend on the rating of the borrower. So there are small SME, small time players which are not investment grade and they're not having rating from external credit rating agencies. For them, we will demand a higher amount of this fiscal guarantee, and players which are having better rating, for them we will demand a lower percentage of guarantee from Government of India. So we are trying to design this scheme wherein the guarantee will be given by Government of India to the lenders, and the first loss piece will be taken over by Government of India. And we have a company called NCGTC in India, which provides guarantee on the behalf of Government of India. So we are trying to rope in NCGTC to provide this kind of guarantee. So the final contours of the scheme are being worked out, and we are hopeful that along with BE, we will be able to finalize the details soon and take the approval of our Ministry of Finance, and then notify the scheme, after which the energy efficiency project, especially in industrial sector, will receive a major push, and India will try to reduce its carbon footprints quickly in industrial sector. Yeah, thank you.
Thanks, Deepak ji, for briefly explaining the new financing schemes which will be rolled out. Now I move to Mr. KP Philip from IREDA, who has been working in IREDA for the last more than 25 years and has been very instrumental for Bureau of Energy Efficiency in training programs as well as for financing of energy efficiency projects. So, Mr. Philip, sir, floor is yours.
Sorry, you're muted.
So you are muted. Could you please unmute yourself?
Sorry, absolutely sorry. Thank you, Vinita. And hello to all my co-panelists and to all the participants who are attending this webinar. I come from IREDA, that's Indian Renewable Energy Development Agency. It's a renewable energy financing institution that was created by the Government of India way back in 1987. Why did we do so? To have a dedicated financial institute for renewable energy. Because those days in the 1980s, no banks were willing to fund renewable energy. They were very wary of this technology, how to generate power from wind, from sun, from water, hydro, etc. So then the government, they decided that yes, we should form a dedicated ministry and also a dedicated financial institute for promoting of renewable energy. And so IREDA was born in 1987. This is exactly what is required for our energy efficiency. So we need some dedicated agency, a dedicated financial institute, and I'm very, very glad that PFC has been chosen, selected to be the nodal agency for promoting, what do you say, energy efficiency in the country. There are many reasons for that, actually. What Carton was saying, that it is the cheapest form of clean energy. Payback period is as low as 2 years, 3 years or more. What Peter said, that yes, there are certain difficulties. There is a lack of, what do you say, monitoring mechanism. The contract of performance is not foolproof enough. So that's the reason why this funding of energy efficiency project is not taking off. Now with PFC coming in the picture dedicatedly for promoting of energy efficiency, and with the support of Bureau of Energy Efficiency, I think so we can take the energy efficiency in a long way. The other reason what I see is that because my role was, the topic which was given to me was the role of public financial institutions today. Most of the government programs that are announced, it becomes very, very easy for a government financial institute to implement those programs. So that is one of the biggest role of a public financial institute. More importantly, we have a lot of bilateral agencies and multilateral agencies who want to sanction lines of credits and all, and it becomes easy, or it becomes comfortable because they get a guarantee from the Government of India. They get a guarantee which they require. So this is where, what you say, the role of a public financial institute is very, very important. The most important is the last 30 years of my service in IREDA, I've seen it's very, very difficult to finance energy efficiency projects. The main reason, because we don't have a very good net worthy players in this market. Why? Because lenders would like to see what is the asset that they have financed, what is the revenue that is getting generated. But in these cases, you can't see what is the assets they have financed or what is the revenue that is generated. Yes, they can see some energy efficiency measures, some energy efficient equipments, but that gets embedded in an existing industry. If it's a building, it gets embedded in the building. A light gets embedded in the building. A lift, an energy efficient lift gets embedded in the building. So you don't have a dedicated security to recover your loan. So that is the primary, what you say, hesitancy of lenders to not to fund energy efficiency projects. The other reason is that the revenue that comes, the savings, that is totally abstract. It's not, what you say, it's not solid in nature, or you can't see the revenue that is, because it's a saving. It's a saving, so you cannot see that. If I fund a solar energy project, at least I can see the revenue coming into a bank, a dedicated bank account, and I can capture that bank account. But for energy efficiency, there is no dedicated revenue that is coming. It's only the revenue that was coming gets saved actually. The electricity bill gets saved, your profit increases, no doubt about it. But the ultimate, you cannot capture that savings. So that is the reason why lenders are wary of, what you say, of funding of energy efficiency projects. If the loan goes bad, for example, what is the fallback mechanism that we have? We go to the industry, they say that, sorry, we can't pay you your loan, the main industry has failed. Since the main industry has failed, we cannot, the energy efficiency measures becomes meaningless. So they say that whatever you have funded, you please take it and go and sell it and take back your money. But the moment I remove it from the industry, then the item becomes totally a scrap. So that is the main reason for that. In spite of all these difficulties, IREDA has been funding energy efficiency projects, and we have found very innovative ways of funding energy efficiency projects. And we have done a lot of funding, which I was sharing with Bureau of Energy Efficiency, and I was sharing with the bankers when we used to do our training programs and all. Either we give the loans directly to the user, or we give it to a leasing company or to an ESCO. So we have done different models of financing, and if anybody wants to have a look at this financing models and all, I can share with them separately. Thank you so much. My 5 minutes is over.
Thank you, Philip, sir, for explaining the challenges which financial institution faces while lending for energy efficiency projects. However, still we know that recently you have lent for more than, I think, 15 to 20 crores in energy efficiency projects. And we believe that in future, this statistic will increase. Now, moving on to CEFIM, I request Rajiv sir, General Manager CEFIM, to start his presentation.
Thank you, Vinita. Good evening, everybody. First of all, thank you to B and OECD for organizing this webinar and having me here. My topic is experience of CEFIM in financing energy efficiency. As you are all aware, CEFIM is a development financial institution which was set up by an act of parliament, and our mandate is promotion, financing and development of MSMEs, as well as to coordinate the functions of institutions serving the MSME sector. So these figures are with regard to MSMEs, and that's why I'll be, because of our mandate, I'll be restricting my presentation to MSME sector only. And MSME sector in India are called as the backbone of Indian economy. There are around 63 million MSMEs, which provide employment to 111 million people, which is second largest employer after agriculture. And there are lot of value addition is done to economy by MSME. 45% of the total manufacturing output, 30% contribution to GDP, more than 8,000 products are being manufactured by this sector, and around 40% of total exports are from this sector. So this is a very important sector to the economy, but at the same time, there are certain red flags. There are high operational inefficiencies in the MSMEs, technology obsolescence. These units are resource intensive. There are low profit margins, low technical capabilities, and obviously there is a lack of awareness amongst MSMEs. As you are aware, these MSMEs are spread out very widely in more than 4,000 clusters across India, and the size also varies a lot. So these MSMEs are very heterogeneous. And as Vinita has also said, the industrial sector consumes around 50% of the total energy consumption, and out of that, around 25% is consumed by the MSMEs. And these are the real photographs of few MSMEs, and you can see these type of problems. These are very common in the MSMEs. So that's why there is a huge savings potentials. It goes up to sometimes up to 30% or even more in terms of energy and resources costs in the MSMEs. SIDBI has been very actively pursuing this energy efficiency and cleaner production in MSMEs, and we have entered into partnership with Bureau of Energy Efficiency, World Bank, DFID, JICA, KfW, etc., many partners, and we have created a dedicated team of experts, and which we now call it as a Green Climate and Sustainable Initiatives Cell. And number of awareness campaigns, workshops, energy audits, etc., are being conducted. And our journey, which started in around 2005, we started with lines of credits on energy efficiency and cleaner production from JICA, AFD, KfW, etc. And then in 2010, we felt that only credit will not help. We'll have to have a credit plus approach. So we also started providing technology advisory services, technical support to the MSME under this World Bank funded project, Financing Energy Efficiency at MSME. This project has since been successfully completed, and it has been rated as highly satisfactory by World Bank. And then thereafter, we felt that why not integrate the financing as well as technical and have a product, a revolving product called end-to-end energy efficiency, 4E is the acronym. And thereafter, we also felt that for encouraging other banks, other FIs to lend to MSMEs, as well as to promote ESCOs, we must have a guarantee mechanism. And with the support of World Bank, JEF and CTF, we are running a guarantee program called Partial Risk Sharing Facility for Energy Efficiency. Under this guarantee program, we are guaranteeing loans given by banks or financial institutions for ESCO developed projects up to 75% of their loans. So now finally, SIDBI has also been accredited with Green Climate Fund, and we want to, we are working on upscaling all these experiences through Green Climate Fund. This is a very brief snapshot of our end-to-end energy efficiency 4E financing scheme, and wherein, as I was mentioning, we have clubbed both of them. There is a technical support component as well as a financial support. So we are helping the units in getting their detailed energy audits conducted, DPRs in preparation of DPRs. DPRs are being reviewed by our internal experts, and then we are also helping the units in the implementation, during the implementation. And further, these are the financial terms on which these loans are being given. And as I said, besides energy efficiency, these projects can also include a part of renewable energy and cleaner production. So these are highlights of our achievements so far. As I said, we are working on the two buckets. One is financial support and the another is developmental support. So we have covered more than 7,000 plus ESCOs and MSMEs under various loans, and the loans of around 65 billion INR, around 1 billion USD have been provided. And these are the savings in terms of electricity and CO2. And further, we have given guarantee to around 35 projects amounting to USD 22.06 million, which have leveraged an investment of around 65 million US dollar. And in the developmental support, 1,600 plus energy audits and DPRs have been facilitated, then supported implementation of 900 plus project under this 4E support. And then these results have been verified in 637 MSMEs through third-party MNV under the World Bank supported program. And finally, we have been also actively promoting energy efficiency in financial institutions as well as energy audits and ESCOs, and have been providing trainings to them from time to time. And this is my final slide, so in which I've listed down some of the key learnings. First key, and these learnings, as I've said, that these learnings are only limited to MSME sector. First and foremost is concessional finance is a must. If you want to lend for energy efficiency to MSMEs, it has to be concessional. Further, technical support is also required, and best would be if end-to-end handholding is provided. I mean, technical support as well as financial support. That would be very useful. And then besides energy efficiency, I mean, units are very happy if they are also given inputs for resource efficiency and cleaner production. So they are also willing to implement that. Further, there is a need for developing the ecosystem. We have to create more ESCOs, create pipeline for them. We have to bring in more financial institutions and banks in the system. And lastly, there is a need for scaling up. We need a big program for energy efficiency. So far, we have been relying mainly on the fundings from various multilateral and bilateral. And these programs have been limited to a few clusters or few $1 million. So we need a bigger program of scale to create a large impact. Thank you very much. That's all. Over to you, Binita.
Thank you, sir. Thank you for explaining wide variety of financial instruments on which SIDBI has been working upon. And I believe with this, PFC will also learn a lot many things, and together we will be able to develop certain more attractive financing schemes for stakeholders. Now I will move to Mr. Ashutosh Tandon, IFC. He has been very instrumental in organizing the training program for financial institutions on e-financing, and he has been very proactively working on all the e-financing initiatives by BEE. So over to you, Ashutosh.
Thank you, Vinita ma'am, and hi, good evening, everybody. So thank you to the OECD and BEE for inviting us for this webinar. So I'm Ashutosh Tandon. I'm an operations officer with the IFC. So just a very quick background on the IFC. Yes, so the IFC is a private sector arm of the World Bank Group. and primarily split up into focus areas on the investment side, on the advisory side, as well as mobilizing private sector capital. Climate finance is a key area and a key priority for the World Bank Group. And overall, currently for IFC, the climate finance portfolio is approximately 30%. And this will go up to at least 35% as a climate portfolio by 2025. Also, as part of the recently announced climate action plan for the World Bank Group, of the overall investments which both across the World Bank Group and IFC which have been made, 100% of those would be aligning to the Paris Agreement in terms of the objectives by FY26. So just to give you a broad overview that climate finance is a key area for the IFC. This is just to give a snapshot for India. The IFC has been involved in terms of investing in various companies in India, across the last 50 odd years, including specific projects on green and climate side. So this is just a snapshot in terms of some of the key projects to highlight. For example, the first green bond, which was issued by Yes Bank in 2015, was fully subscribed by IFC, and this is something which was also pushed in terms of development of the green bond market. Similarly, Tata Clean Tech, which was the first private sector clean tech focused NBFC created in 2011. This was a joint venture between Tata and IFC. So just to give you a very small flavor in terms of the focus which has been there by IFC, of course, globally and also in both South Asia and in India. Just before I come to some specific examples and more importantly, take away from these examples of energy efficiency financing facilities which IFC has had globally, I'll be taking a few examples from 3-4 countries and drawing certain lessons from that. Just to add before that, as Britanna mentioned, the IFC has been working with the DE over the last 3-4 years as part of the EcoCities EU IFC EcoCities program. And some of the lessons which we have also learned working in 4-5 city-focused programs, both across actually covering training programs for FIs and SMEs, conducting energy audits across these 4 cities. Some of the lessons, are also important to draw upon. I think Mr. Jain also spoke about some of the challenges which are being faced both by the FIs and the SMEs, especially when it comes to energy efficiency financing. And I think, some of the lessons which we try and draw upon from other country examples are important. So I briefly spoke about, Tata Clean Tech as, one of the, I can say almost model which exists. I think it's very important to have the private sector, FIs and private sector also, contributing to EE financing. I think that's key. We've seen, of course, with SIDBI and especially on the public sector, there has been a lot of push on climate finance, of course, RE and now also EE more recently. But also having the private sector to be, part of this process is important. Having a dedicated agency, in this case, of course, Tata Clean Tech is an example, which was joint venture between Tata and IFC, of having a focused entity towards green finance. Of course, Tata Clean Tech looks at both RE and EE, and that's why I think it's great to have, I think, CFC as a nodal agency, which has been given by the mandate to really push financing on the EE side. That certainly having a dedicated agency is something which we feel would be important. My next 2 examples, is looking at one from China and one from Philippines. Here, both of these examples really talk about having risk-sharing facilities to really promote EE financing. In the first example in China and a similar example in Philippines, which we'll come across later. Here, of course, China into 2006 had created their own energy efficiency financing platform called CHUI. The first 2 CHUI programs were focused more on large industries, whereas their third program focused more on the SME financing side. So the key takeaways here, drawing upon lessons, from the different TUI programs from China, is certainly that, one is that that there is that encouragement required for the private sector financiers in terms of helping them understand that within existing portfolio there is a lot of scope of refinancing. Similarly, handholding. I think from Sidbi, Mr. Rajiv mentioned this, that handholding of both FI partners as well as SME partners becomes very important. So, the one key takeaway here we would like to mention is that the technical advisory program, of course, alongside the risk sharing facility is something which we have seen has been quite important in terms of actually helping, in this case, private sector FIs get a better understanding of both the SMEs and how to go about doing e-financing. This is something which took time. It wasn't something which immediately worked, as soon as it started. But this handholding is something which was important. So, this is just a different model which I spoke about, that, having a sharing facility which was supported both through a first loss, not only by the banks, but in the first and second case by donors. And, for the SME facility, this was supported by the government program as well. The Ministry of Finance in China supported the first loss as far as the risk sharing facility for promotion of SME e-financing was concerned. Given especially that this is a risky segment, I think that's something which is understood, and accordingly the first loss facility was created. Again, I think the key takeaway here is that, of course, the risk sharing facility is important to encourage, in this case, private sector banks to look at the space. But having, a handholding of these players becomes very important to help them think through how to, carry out financing especially on the SME side. So the Philippines example, again, I won't go through this in detail, but, just looking at the numbers, it's very similar to the China example. Whereas the risk sharing facility itself was approximately 100 million, which was created. And, we mentioned, of course, almost 90% of that was utilized. But more importantly, this point here is that the BPI actually built up a sustainable efficiency portfolio of close to 700 million because they had a better understanding of the space, once the risk sharing facility helped them kind of realize that this is an investable portfolio. There is a lot which can be done. So, this is something which I just want to mention, that by risk sharing facility is a good trigger. I think the understanding of for the commercial banks becomes important. Similarly, the last model, which is on Turkey, I think this again touches upon Mr. Rajiv's point earlier about having some kind of blended finance or subsidized finance. Of course, from a private sector, this is a support which comes in either from a government body or from some kind of donors. But this is an example where, again, IFC provided finance, which was blended finance, working with the Turkish government for promotion of or creation of specific portfolio, in this case for leasing companies. So just again reiterating some of the points in terms of having a dedicated agency, which of course focuses on e-financing. I think KFC is not even in this case. The sharing facilities, again, to prompt and encourage private sector finance to look into this space, but a lot of handholding which is required of the FIs and SMEs. And of course, the blended finance being one of the models to, again, at least encourage that early uptake from the FIs to push them into the sector. So, these are some of the lessons from different country examples. The last slide is just some work which currently we have ongoing from an IFC perspective. This is post-COVID to really try and understand what is the need and requirement for the SME sector, given that COVID, of course, had a lot of impact. And the results of the study, as well as what financial models are possible, is certainly something which we look forward to discussing with BE as well as the other colleagues, and look forward to, of course, working in the e-finance space for the SME sector. Thank you. That's a brief from my side.
Thank you, Ashutosh, for explaining the international financial mechanisms and the experience of IFC in national as well as international financial mechanisms. Now we have reached to the end of this session, where all the 4 speakers have spoken regarding energy efficiency financing schemes and the experience in energy efficiency area, especially in India. Now over to you, John.
Thank you very much, Vanita, and thank you to everyone for speaking on your experiences today. It's great to hear. There's a real mirror effect from the first set of presentations on the global experiences with these energy efficiency finance platforms and protocols, that a lot of these issues you bring forward around needing to do hand-holding and capacity building, working to address the perceived risk in the market, as well as elements around access to finance, concessional finance, etc. I think what we're seeing from today's presentations is there is a real continuum here in terms of how to create, if you will, the perfect storm for energy efficiency development in a country, by making sure that the information and the data around the performance of those assets and energy efficiency investments is there, that this can be done in a way that is standardized and easily interpreted by financial institutions and others acting in the energy efficiency space. And that, complementing this with additional schemes such as those that Bea mentioned during its presentation to help get the market rolling, working with the various actors, particularly in the financial market, to become comfortable and familiar with those projects, that this can help to create a real pipeline of energy efficiency investments in India and elsewhere. We have we started a bit late, so we have a bit of a gap here in terms of time, but very happy to take a few questions. I will note as well that there are some responses to questions that were being asked in the platform, and thanks to Trevor to responding there around the ICP protocols. And also to note to everyone in the audience today that both the DEEP and the ICP websites have been shared in the chat, so please do take a look at those if you're looking for further information. And we will share the presentations on our CEFIM webpage after the end of this event. Just as a brief, I know we have a comment from one of the participants in the spectators group today from the Andhra Pradesh State Energy Conservation Mission. Mr. Reddy, the floor is yours. I'm just 1 second. Let me give you the right to speak. Apologies, I'm trying to find the button to give you the right to speak. But voila, Mr. Reddy, you should be able to speak now if you would like to raise a point around the work that's being done in Andhra Pradesh. Mr. Reddy, are you able to speak?
Yes, sir. Good evening, sir. Good evening, sir.
Yes, we can hear you.
Hello, sir. Good evening, everybody, sir. I'm very happy to participate in today's international webinar on energy efficiency platforming. Really, it is a very auspicious day, sir, because thanks to Bureau of Energy Efficiency and its team, with Director General Mr. Abhay Bakraji and Director Nita Kanwal and other top executives of the Bureau and Minister of Power in coordination with the OECD to organize this international webinar. The need of the hour, sir, as far as Indian energy efficiency program is concerned, energy efficiency platform is the very significant subject to accelerate energy efficiency in the country, what I feel personally. The Andhra Pradesh state has been taken several stringent steps to enhance energy efficiency in the state. As you know, Ujala scheme we have mentioned in our today's webinar, Ujala. Andhra Pradesh has registered to distribute around 2 crore LED bulbs in few years back, and has created a world record. And World Bank has also ranked Andhra Pradesh as #1 in the country in energy efficiency after Rajasthan. Thanks to BEE, we have been implementing several programs. Among all other programs, energy efficiency platform will play a very pivotal role in reaching the targets of achieving the investments of 13 lakh crores of rupees in India. As I have mentioned, the energy efficiency where 50% of the consumption savings can be achieved through industry. thanks to PAT scheme, perform achievement scheme, perform achievement trade of BE scheme, where $3.2 billion of US dollars have been saved. Such a very gigantic scheme where all other SDS and state governments also supported the BE. It's a very welcome step, sir. We are keen to import foreign technologies and our support through BE. We are determined to establish energy efficiency practices in a big way, sir, and to play a very proactive role in this mission. And it will ultimately benefit for the climate change, to mitigate the climate change, the very need of the hour for survival of the humankind. Thanks for this opportunity. Thanks for Madam Vinta Kanwal and Dr. Janji and Bhai Bakre and other all international delegates. Hearty congratulations for everybody, sir, to organize this program in a decent way. Thank you so much. Thank you. Good luck. So much. Thank you. Good luck.
Okay, thank you very much, Mr. Reddy. I'm glad to hear that this is happening in Andhra Pradesh in terms of building up the capacity in the market and working with partners. As was mentioned by several of our panelists, this is really a critical element to making this happen in India, and it's good to see that you're taking these efforts forward with Being. I see we have a couple of hands raised. If Mr. Singhal would like to ask a question. Vivek Sandal, do you have a question? Okay, and Praveen Varshni, do you have a question? Okay, I would like to, given the time, I would like to ask a final question to any of our panelists and esteemed speakers today, if they would like to give a very quick concluding remark, particularly around thoughts of how to move forward with energy efficiency finance platforms and protocols in India to benefit this very large untapped potential for energy efficiency investments across India. Perhaps Karsten or Peter, you may have some concluding remarks there.
Thanks, John. I've learned a lot today, and in fact, it's impressive. The amount, first of all, the amount of time that has been, in terms of years, that has been invested in energy efficiency by the Bureau, and the number of initiatives that are ongoing. So I really do congratulate all of the colleagues from India in this excellent development. I would say that in energy efficiency, the only thing that has stood the test of time in Europe is indeed constancy. So financial institutions, in my experience, have taken a very long time to turn the corner, to fully understand and embed within their practices and policies energy efficient safeguards, led very much by the World Bank and the IFC in the public space, but increasingly being seen thanks to the implementation of the TCFD and the changes in the regulation of financial institutions that are now coming. So the European Central Bank has fully recognized the importance of climate change in the risk set. Transition risks are very recognized by financial institutions operating in Europe. And this driver, perhaps more than any else at the moment, is accelerating the keenness by which financial institutions are engaging with their clients to provide them with the opportunity to see energy efficiency opportunities in industry like the ones that were so graphically showed to us on this presentation, and with respect of people's homes and upgrading the energy performance of homes and buildings, which for Europe is an important thing. So I would definitely encourage the continuation of engagement across ministries. So from the BEE across to the finance ministry and to other ministries, thinking about the way in which finance is regulated, because that certainly in Europe has been a very strong driver. And in setting up EFIG, we have on our steering committee members of the finance and financial regulatory ministries as well as the energy ministries, and I think that's really important. I also remember that attending the energy efficiency meetings of the G20, we often had members from the financing ministries, the treasuries, and the ministries of finance, as well as the ministries of energy and climate change. So I do encourage that, and I think that the more we can have a consensus building here, the better, and that's what EFIG has really stood for. But Carsten, perhaps you had some thoughts as well?
Yeah, I agree. I think a lot of the right things are going on in India already. I think there are still opportunities on the more general de-risking side. Data collection and best practice examples are really important, both for project developers and for financial institutions. In the industry in particular, they may also need sector-specific technology catalogs to understand what the opportunities are. And then I think insurance and guarantee instruments, as already being mentioned today, are a key aspect of taking the financing forward. And in general, public-private partnerships between the responsible authorities, both on a national and on a regional level, and then also financial institutions interested in the area. And I think there is adequate document now that energy efficiency projects do deliver, and that they are an attractive risk-reward proposition. Obviously, there are a lot of other barriers, including credit risk for the individual counterpart and the lack of ability to take guarantee in an asset. But that will have to be solved then.
Thanks very much, Carsten. And Trevor, maybe any final thoughts from your side at ICP or GBCI?
Sure. Well, it was great learning about all the work that's being done in India today. I guess I would just reiterate the importance of standardization in project development, and just let everyone on the call know that we at ICP and GBCI are here to answer any questions. Feel free to reach out to us.
Thanks very much, Trevor. Vinita, I'll allow you some closing thoughts from on behalf of B, and then we'll close the webinar today. But thanks very much again to all of our speakers in both the panel and on the Indian presentations. Vinita.
Yeah, from BEE side, I'm thankful to all the panelists, all the speakers, and especially international speakers who have told us several things regarding creating databases, and it will really help, and success stories which are also very important. And with the support of SEDB, we had also created 50 case studies, but we are not limiting ourselves to 50. So definitely for the last 5-6 years, SEDB and many other financial institutions have financed E projects. So definitely BEE will work upon more case studies. And at the same time, BEE is also in process of establishing the facilitation center, which will also create one IT platform. There we will try to do the matchmaking actually between financial institutions and the borrowers. And as we understand today that I think Deep2 has also been launched, and the way they keep the databases very safely, we will try that we could also prepare such kind of information in our IT portal. So thank you very much to all the international participants and the speakers from all the financial institutions who participated today, and all the SDAs also who have participated, especially AP-SECM who had given their remarks on the energy efficiency programs which BEE and Government of India has been working upon. So with this, I'm thankful to all the participants and speakers for attending today's workshop. Thank you.
Thanks very much, Vinita, and thank you again, everyone, for this very lively presentation of experiences and thoughts around how to advance on energy efficiency finance in India and elsewhere, for that matter. We will be posting this, as I mentioned, on our CEFIM webpage, and please do take a look at the sites that were shared in the chat. There's a lot of really interesting information there on the EFIG webpage, on the DEEP platform, as well as on the ICP protocols. So I would encourage you to take a look at those. Thanks very much again. I realize it's late in India, so I will let you all get to your dinners. And for our European and American counterparts, we'll let you get back to work. But thanks very much, everyone, for this very lively and interesting conversation. Much appreciated. And let's continue these conversations forward.
Thanks, everyone.
Thank you, everyone.
Thank you, everyone.
Right.